The first story is really going to be talking about what the Fed did yesterday and did a 0.25% or a quarter-point cut. As widely expected, the Fed trims the federal funds target rate by 25 basis points down to 1.75% from 2%, and it's the second cut in a row. Still see sustained expansion of economic activity. All right, so normally when the market is moving higher, you normally don't cut interest rates. You cut interest rates when the market is in the doldrums and you try to spur the economy. But the economy is still doing good, sustained expansion of economic activity, strong labor market conditions, and inflation near the committee's symmetric 2% objective. And what the Fed's job is to do is to help to ensure that we have a strong labor market and that they keep inflation under control. All right, that's what they do. All but 3 of the FOMC members voted for the action. Dissenting were James Bullard, who preferred to cut rates by 50 basis points, and Esther George and Eric Rosengren, who preferred to keep their target range unchanged. So now, with that information, let's go back into the software and let's use that indicator that looks at what the market is doing. And there it is again. There's the VectorVest composite. Let's go put this on a 6-month level. All right. Market fell. The market's now rising, but the market is effectively looking like it's rolling over possibly, but definitely moving sideways. All right. Definitely moving sideways. So that market information by way of the Fed was very interesting. I'm going to do something else. Let's go put this on intraday, 2-minute bars for 2 days. There we go. So yesterday, the Fed came out with its information at 2 o'clock in the afternoon. How did the market react yesterday? As soon as it happened, the market responded and fell. And as the market fell, what was going on? People were like, oh man, we only got a 0.25 basis point, blah, 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 blah. And then the smart money came in and said, all right, this was baked in. Let's put things back into perspective. The market ran up nicely going into the close yesterday, which occurred at 4 p.m. Where am I at? 12, 9:18. 2 o'clock, 12 o'clock. I'm missing data. That's interesting. Intraday, let's do this again. Intraday, I'll put it on 1-minute bars, 2 days. Let's try that. There we go. 9. Oh, there it is. All right, so that's what happened, and then the market closed yesterday. So there we go. Going into the close yesterday, let's go set this up. 9:40, boom. That was the close of that was the last candle of the day. Yesterday, big down red candle, but look at the response as the smart money came in after the Fed started talking, and look at that run up and going into yesterday's close. Then we start with today's open. All right, at 9:30 in the morning, today's open, we fell, and then going into later on in the session, look at that nice run up in the market today. A little bit of a rebound from yesterday's activity after it fell, hit a new high, but since about 11:38, 39 this afternoon or this morning, look at the rebound, look at the slingshot to the downside. Found the level of support though, sitting at 48.21. But look at what we're at right now. Look at this nice 45-degree angle on 1-minute bars. All right, look at this nice 45-degree angle. 1-minute bars as the market is starting to pick up coming into the close. We still have a few hours, couple of hours before 4 o'clock. Let's see what the market can do. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.